Hello again. Welcome to another episode of the Uranium Market Minute. My name is Justin Hune, and I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. Before we get into the content of today's video, nothing in this video is intended to be investing advice. I am not your financial advisor, and this is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. Let's jump right into the daily scoreboard. Pretty ugly day out there in the uranium world. The spot price down almost 10% on the day to $43 a pound mid-market. I think what's clear is that when Sprott is not in the market, there are very motivated sellers that are taking advantage of the opportunity to push the price down. Anytime you see this, know that that is what is going on, okay? So yesterday, Sprott Physical Uranium Trust did not take any new capital. Since they were trading at a discount to NAV throughout the entire session. They came into the day today at a 3.46 discount to NAV. They had 23 million in cash starting out the day. And it's likely that they remained at a discount to NAV for most of the day, although the spot price, I believe, fell relatively in line with the Sprott Physical Uranium Trust. We'll take a look at the charts in just a second. Since the August 17th, the start of their ATM, they've raised $745.1 million and purchased 16.7 million total pounds of uranium. Turning to the ETFs, URA issued 450,000 shares over the past 2 days. Remember, I was not here yesterday. URNM increased their share count by 100,000 shares combined over the previous 2 days. That's a mandated sector buying of 17.7 million. Considering that, there's some pretty decent selling pressure going on out there. Yesterday, we were relatively flat. The day before was down, and today was down a bit, although there was some dip buying happening. The assets under management for the two ETFs pulled back from Tuesday's assets under management, 82 million over those 2 days. That's primarily has to do with the performance of the stock, the chart of the stocks relative to considering that they increased their amount of shares and raised some more cash. The AUM of these two combined ETFs is still up 720.9 million month to date. It's been a huge month, and we're seeing a little bit more of this backing and filling coming back off of the big month that we've had in the sector. Let's take a look at the charts here. Starting off with URA as usual, and you're going to see this across most of the charts that we're going to look at today with some considerable dip buying. The stocks opened up, down, and closed down, although they traded up considerably from their intraday low. This is the same case for URNM. Cameco, NextGen, Denison. Okay, you see all those hammers? Dips are being bought. And so what I'm seeing here and how I'm interpreting this is that there's sector-wide and kind of theme-wide. We saw energy stocks across the board getting hit pretty hard today. An overall selling day across the board in resources for the most part. However, I do believe that investors generally still believe in this thesis, even in the short term, to the point where these big selling days are seeing dips being bought considerably. That's a really good sign. Sprott Physical Uranium Trust, like I said, down pretty big today, although considering the spot price was down almost 10% on the day, then we're likely looking at possibly less of a discount to NAV, if not pretty close to even with NAV. All we need is a bit of buying pressure here to put them back above that 1% premium to NAV and rinse and repeat. They're a bit below this 50-day here. We went a bit below the 50-day in the previous reversal a couple of weeks back. I think that we're close to the bottom of this selling pressure with the spot price. And again, this is also something that we typically see at the end of each month. And the reason for that is that, so today is the last trading day of the month, right? We will have the first of the month on Monday. There's entities that are uranium traders, uranium brokers. They receive offtakes. So they have an agreement to purchase a certain amount of material from producers on a month-to-month basis. And the month going forward, so in this case, that'll be November, the pricing that they will pay for the offtake for the month of November will be based on the month-end closing price of the spot price of uranium. And so if you see the spot price getting whacked around on the last trading day of the month, that's what's happening. And it's important to understand that. So in my opinion, we are very, very close, if not at the bottom of this intra-cycle downtrend. And this backing and filling, like I mentioned, from the strong month that we've had, still, even with this last week or so of selling, very, very strong month for October. Like I mentioned, the AUMs and the two ETFs up $700 million month to date. It's just incredible. Let's take a look at the mailbag. Justin, can you talk about the Cameco earnings call this morning and the importance of the fact that they are giving no indication they're putting McArthur back online? So Cameco, I'm just going to describe this as if you're new to this sector, which I believe that a lot of you are. Cameco is one of the larger companies that's publicly traded in the uranium space. They have a long history of being a reliable producer of uranium. They have multiple mines. They have the Cigar Lake mine, which is up and running in Saskatchewan in the Athabasca Basin. They have a JV with Kazatomprom in Kazakhstan, the Inkai mine. That's just a monstrous ISR mine, very, very good mine. And then they also have the McArthur River mine. They have a bunch of other smaller mines, a couple of them on care and maintenance, a couple of them, they have exploration projects, they have development projects in the States. But their primary assets are Cigar Lake, Inkai, and McArthur River. Now, McArthur River is the largest uranium mine in the world. It has been on care and maintenance since 2018. And the messaging from Cameco since that point was, we are keeping this mine in care and maintenance at great cost to us for the sake of allowing the commodity to find its bottom and start to turn around, right? So since they have shut that mine down or put it on care and maintenance, the cumulative effect of the production that has not come from that mine and the purchasing that Cameco has had to do in order to fulfill their long-term contracts that would have otherwise been fulfilled by the pounds they produced has had over 100 million pound effect on the market. So Cameco has taken this on in order to help to stabilize the market. And their messaging all along has been, excuse me, that they would not be bringing McArthur River back online until they had a sufficient order book at prices that they like. And they never get too specific on how many pounds they would like to secure in long-term contracts or at what prices. All we know is that it's more. They mentioned in the conference call today that they've signed 20 million pounds of uranium into long-term contracts this year. Last year, it was 30-something million pounds. I'm sorry, last year, I believe it was 18 million pounds. The previous year was 30-something million pounds. These are still very small numbers in terms of real term contracting cycle. So we would assume before this current price rise in uranium, before these supply chain issues, before the costs of inputs have drastically risen in terms of the cost of energy, and in terms of before the inflation has really hit like it has in the past 18 months, they were signaling that they wanted prices in, let's say, the 40s per pound, maybe mid 40s, which is where we're at currently in the long-term spot price. Of course, the terms of their contracts are almost always undisclosable. They cannot disclose. They have to sign NDAs, right, with the entity that they're contracting with. So we don't know the exact numbers, but we can assume that they're at least at those prices. And if they're intelligent, they're even higher. And or they have a strong reference to the spot price, which a lot of term contracts typically do. So in today's conference call, which is the quarterly conference call, of course, their earnings numbers look terrible, but the market doesn't even look at the earnings numbers. They just look at the messaging from Cameco, because what Cameco says to the market speaks far greater than what the actual numbers are in terms of their earnings per share. So what they were questioned today on their plans with McArthur River, and they essentially said, yeah, we're not even thinking about bringing it back online. And even if we did decide today that we would, it would be 18 to 24 months before we're producing. And so the restart of that mine is speculated to be complicated, let's say. This is a very complex mine. It's an underground mine. It's very deep, and it goes through the famous Athabasca Basin sandstone, which is basically a sponge. It's full of underground aquifers, and they have to they have to utilize what's called a freeze wall in order to keep the mine from flooding. It's a very complex mine. The grades are so fantastic that it's worth the huge expense to build a mine like this in order to get to that ore. But the next phase of mining, some who know far more than I do about geology and about actual uranium mining speculate that the next phase of mining from McArthur River is not necessarily a cakewalk. It's a more difficult phase in terms of geology. I don't know enough about geology to speak on that, but that is something that I've heard discussed many, many times. So the point I'm making here is that when they decide to bring it back online, that means two things. One, that means that the term market is firming up and is giving Cameco what they need in order to make that decision, which is a very positive sign. And two, you're looking at 18 to 24 months before there's anything even producing from that mine. And the first year of production from that mine, 4 million pounds. The second year, they expect to get to full production at 18 million pounds. And they actually can go above that 18 million pounds once they're in production. So the fact that they're signaling that they're not even thinking about it yet and considering it yet is it's a positive sign at the very least in the short term. So that does mean that the utilities are not coming to the table to the extent that they need, which obviously means we're still kind of early in this, right? But it also means that the pounds coming from that mine, we're not going to be seeing those pounds for at least 2 years from this point, and it's probably going to be even more. We'll have to see how the market treats Cameco and their term contracting needs in the coming months. But either way, Grant and Tim from Cameco both sounded very bullish, very excited, very positive on the space. And as in, they don't always, you would think that company CEOs, company managers are always trying to trot along this bullish argument for the sector. And for the most part, they do. But when the sector was really hurting at various points last year and the year before that, you could hear it. You could hear the despondency in their voice. There was nothing really to be excited about besides, a hope that things would turn around or a knowledge that they would eventually turn around. And now you can actually sense the excitement in their voices. They see what's going on. They're not dumb. They know what's happening with the spot market. They know what's going to happen in the term market, and they know what they need to see in order to bring that mine back online. So in my opinion, that was one of the most bullish conference calls that we've ever heard from Cameco. And it's great that they were signaling that to the market. So hopefully you're all hanging on through a few days, maybe north of a week or maybe two of a bit of weakness. But as I say frequently, you can't have outsized gains without outsized volatility. And so you have to be expecting these pullbacks along this bull market. And with that said, I hope everybody has a great weekend, and we will see you on Monday. Cheers.